Hey guys, hope you're doing well today. Today in this topic, we are going to pick top pharmaceutical companies in India to bet on or to invest in Indian future. Okay, I will present my screen. We will directly launch into IBF website. So you can go to this website and you can check all the industries related informations. All right. To begin with, let's look into Indian pharmaceutical industries and its advantages in India. All right. The number one is a low cost of production and R&D boost efficiency of Indian pharma companies, leading to competitive exports. Right. The second one is Indian drugs and pharma exports reached US $5.78 billion between April and June 2021 in just one quarter, all right. So it's almost a 6 billion US dollars. Second one is economic drivers. High economic growth along with increasing presentation of health insurance to push expenditure on healthcare and medicines in India. The third one is policy support. In June 2021, Finance Minister Mrs. Nirmala Sitaraman announced an additional outlay of rupees 1,97,000 crores, right? That is 26,578 million US dollars that will utilize over next 5 years for the pharmaceutical PLI scheme in 13 key sectors such as active pharmaceutical ingredients, drug intermediates, and key starting materials. So the final advantage we can say is increasing investments. The FDI inflow in Indian drugs and pharmaceutical sector reached US $130 million between April 2021 and June 2021. Right. Let's directly dig into introduction. India is the largest provider of generic drug globally. Right. Indian pharmaceutical sector supplies over 50% of global demand over various vaccines and 40% of generic demand in the US and 25% of all medicine in UK. Globally, India ranked third in the pharmaceutical production by volume and 14th by value. All right. Let's go into the market size. According to Indian Economic Survey in 2021, the domestic market is expected to grow 3x in next decade. All right. India's domestic pharmaceutical market is estimated to be US $42 billion in 2021 and likely to reach US 65 billion by 2024. Right. And further expanded to reach US 120 to 130 billion by 2030. That's a very big number, right? So currently it is 142 billion US dollars, and by 2030 it is expected to be around 120 to 130 billion US dollars. Right. Then India's medical devices market stood at 10 billion US dollars in FY20, and the market expected to increase at the CAGR of 37% from 2020 to 25 to reach 50 billion. It's almost 5x growth. Right. Next, we'll check in the exports, how Indian medicines are exported to other countries, right? So Indian drugs and pharmaceutical exports stood at US 24.44 billion in FY21. So like as we mentioned earlier, right, it's one of the major economic driver to Indian economy. So the exports stood at 24.44 billion in FY21, and India is the 12th largest exporter of medical goods in the world. The country's pharmaceutical sector contributes 6.6% to the total merchandise exports. So as of 2021, India supplied a total of 586 lakh COVID vaccines, comprising grants, commercial exports, and export under the COVAX platform to 71 countries. So this itself is a very great feat to Indian pharmaceutical, right? So Indian drugs are exported to more than 200 countries in the world, with US being the key market. Okay, we are the major supplier for US market, right? Generic drug for 20% of the global market in terms of volume. So in generic drugs, we are the 20% provider for the global export, making the country the largest provider of generic medicine globally, like we mentioned earlier, right? So India's drug and pharmaceutical exports stood at 3.76 billion US dollars between FI 2021, that is between April 2021 and May 2021. So the FDI inflow in the Indian drugs and pharmaceutical sector stood at 18.12 billion US dollars between April 2000 to June 2021, right? So these were the introductions we had regarding the Indian pharmaceutical companies, right? So let's go into the uh, stocks that we are going to pick individually, right? We have our top three stocks for today, and we are going to uh, present you guys how we are going, why did we pick that stock, and how are we going to invest in it, right? So thank you. Let's go into the next segment. So let's go into Screener website, and then search for our first stock of the today, that is Laurus Lab. So Laurus Lab is engaged in offering a broad and integrated portfolio of active pharmaceutical ingredients called APIs and generic FDFs. So generics, finished dosage and dosage forms, and the contract research services to cater to the needs of the global pharmaceutical industry, right? So Laurus is among the leading API manufacturer in ARV, that is antiretroviral, and the oncology segment. So its customer include Mylan, Nacto, and Aurobindo Pharmas. And the interesting fact about this company is it was a single product company in 2010, and it has grown to 60 plus commercial products in 2021. And the company yet has more than 116 patents, right? So let's look into its fundamentals. So Laurus Lab has a market cap of 26,957 crores, with currently trading at 502 crores. So the stock PE is 26.6, slightly lower than the industry PE of 28.4. So the ROCE and ROE looks very attractive. Both are more than 40%. So in last 5 years, the company has uh, grown more than 500%, right? It's almost uh, yeah, it's almost 450 to 500% the company has grown, right? So when we do the peer comparison, it is one of the lowest PE among its competitors with highest market cap, and the second highest ROC and the highest ROE. Okay, the debt to equity ratio is one of the highest among its peers. So we'll directly get into profit and loss. So it's very clear that the sales are shot up more than 4x from 2014, from 1,160 crores to 4,814 crores. So in TTM, it is the highest, right? It's the all-time high. It's 5,182, and so is the operating profit. So one important thing to notice is the operating profit margin. It is up 32%. That looks very amazing. So and the interest, company seems to have decreased its interest rate from 111 crores 268 in this. So, and 88 crores in TTM. So PBT has grown more than 10x, right? So it was at 121 crores in 2014, and now it is 1,301 crores, right? So in TTM, it's the all-time high again. It's 1,344 crores. So the PAT, right? Even the PAT has grown 10x, right? So from 97 crores to 984 crores. So in TTM, it's trailing 12 months. It has gone to the all-time high. And one more thing to notice is even the EPS, earning per price, is increasing, right? From 2017, from 3.6 rupees to all down to 1.76 in 2019, and 18.33 rupees currently, right? So the 5-year CAGR of sales growth, 5-year compounded sales growth is 22%. Profit growth is 49%. Amazing. Even the stock price CAGR stood at 39%. And in last 3 years, it's very attractive and very lucrative that it has grown in the average of 87% annually. And 5 years return on equity is 22%. So the company has constantly increased its share capital from 78 crores to 107 crores. So does the reserves from 281 crores to 2,892 crores. One thing to worry about is, and the key risk factor we can say, is the borrowings. The company has increased its borrowing from 543 crores to 1,765 crores. So it's not a major issue, but it's a key point that we have to note for. So the company has positive net cash flow, which derives 733 crores from its operating profit, and we can see that in investing activities they are spending a lot, and even the financing activities. So one more thing to bother and a key factor we can say is the debtor days has increased till 100 to 99. So that means that the clients they are serving is delaying their payment, and it's almost they're delaying for 100 days or almost 3 months to pay back the amount. So the promoter shares holding have been decreased from 33 to 27%. So FIIs have increased from 8 to 22%, 22.82%. So his DIS have increased their share, decreased their share from 38 to 4.81 crores, and the public have increased from 20 to 45%. So this is how the current shareholding pattern. So the next company we are going to look is for Amrutanjan Healthcare. So the company has a great history, all right. So Amrutanjan Healthcare Ltd has been manufacturing Ayurvedic balm for pain management since 1893. It's almost 130, 120 years, right? So it's currently managed by its third generation of promoters. Company is more than 120 years old and into OTC product in the segments of pain management, women's hygiene, and other packaged fruit juice drinks, right? So let's go into the highlights of the company. Amrutanjan is the #1 ranked in modern trade of head category with volume of around 41% in CY19, and they have got into another business. They have launched their they got into women's hygiene segment as well by launching comfy sanitary napkins in FY14, and has scaled up to 40 crore business in FY20, and company has achieved 2% of market share with growth of 35% in FY19. One thing to highlight here is they started it around FY14 and they have already scaled it up to 40 crore business in FY20. So there is a lot of scope to increase in this segment, right? So they can, this could be a major uh, driver for Amrutanjan in the coming years. So the product revenue, the company got 80% of revenue from palm pain management and 17% from women's hygiene in FY19. So currently, and next 3% is from packaged juice segment. So what we target is what they are targeting is to increase the 17% to the higher numbers. So does the company might ready up. So once this women's hygiene product revenue increases, so the revenue from pain management should decrease, and like by all the way they have to increase the revenue from the women's hygiene. So let's look into geography revenue. The company is a leader in its product in South, where get 58% of revenue from it. It gets 26% of revenue from East. The rest is contributed by West and North, where they are trying to penetrate next. So actually, they already have a tight firm in East, and the West and the North, where they are trying to penetrate. Okay, they have to. Currently they have got into more than 5,000 distributor and sub distributor in those areas to increase their. Yeah, they have appointed more than 5,000 distributor and sub distributor distributors in near future, right, to increase their geography, right, of the geography of the business. So let's look into their fundamentals. So it has a market cap of 2,627 crores. So it's one among the least, and it has a huge potential to grow, right, among its peers. It's currently trading at around 900 rupees, and stock P is slightly higher of 41.6, where industry P is 28.4. So, and ROCE and ROE look very attractive, both more than 30%. So ROE is 43.6, and ROCE was 43.6, and ROE is 32.6. So let's look into 5-year chart. The company has grown more than 3x, right? So it was around 300 rupees, and it's currently scaling at 900 rupees. The company has given up 3x returns in last 5 years. And one thing to highlight is like the company has majority of pros than the cons. In the peer comparison, we can see they have the third highest P and one of the lowest market cap, and they have the best ROCE of 43.6, like we talked, and 32.6 of ROE, like the second highest, and they're completely a debt-free company. So let's look into its P&L table. So the sales have grown from 86 to 333, right? So it's already all-time high, and in trailing 12 months, it's 383 crores of sales. So the company has grown very significantly with its growth and sales. So its operating profit from 11 crores to 75 to 76. So again, the company is around its all-time high, even this pandemic situation, and the operating margin is around 15 to 18% currently. Before, and currently they have found a way, and they have a better operating margin. So you can see that interest is being constant or almost 0 or 1 because of their low debt, low borrowings. So PAT is increased from 19 crores to 82 crores. So it's all-time high, and even in TTM, it's 85 crores, which is all-time high. So his PAT, profit after tax, has increased from 12 crores to 61 crores, and trailing with 63 crores. So it's again all-time high, and even the EPS, right, from 4.5 rupees to 21 rupees, even it's all-time high, and it's significantly growing. So since the company is like a very newer, let's consider the 3 years compounded sales growth is 15% and TTM is 36%. So 3 years profit growth is 48%, very amazing. And stock price CAGR is 50% in last 3 years, and ROE is at 23%. So you can see that the TTM trailing 12 month has almost all-time high, right? So the share capital remained constant at 3 crores, and reserves have been significantly increased by 2 times. So the major thing and a good thing about the company is they're almost a debt-free company. They have a positive operating profit, cash flow from operating activities, and debtor days have been decreased. It's very uh, good to any company, right? So in this financial year, just it is decreased to 19 days. It's all-time high, right? All-time low, and they have decreased to 19 days from almost 78, 60 days, right? So it's a very good sign to a company. The ROCE has constantly increased from 18 to are on the range of 20 to 30. So now they were in this range for almost 7, 8 years. Now the company has found a way, and they've almost doubled, right? From 26% to 44%. So the promoter have been constant with the company, and the FIIs have increased. The DIIs have been constant, and the public have been constant to this company. So the third company we are going to talk about is Cadila Healthcare. So about the company, in 1995, the group was restructured and thus was formed Cadila Healthcare of the Zydus Group, right? So from 1995, the Cadila Healthcare got demerged from Zydus Group, and from humble turnover of 250 crores in 1995, so the turnover was 250 crores, but currently in FY20, the turnover is 14,253 crores. So you can see the growth clearly, right? So the key points is they are ranked fourth among the US generic companies, having a growth sales of around 221 million US dollars in FY11 to 828 million dollars in FY20. So it's almost a 4x growth, and has secured the highest number of ANDA approvals in last 4 years, with total 337 ANDA approvals and 117 DMF fillings and 180 launched products. So you can just Google around what are ANDF and DMF. Like, if you are guys are not sure, please leave it in a comment. We will happy to make a video on it. So the India is around 27% of revenue. The fourth largest company, accounting for 4.2% of market share, with 12 brands featuring within the top 300 brands, and 9 brands with sales more than 100 crores. So they have 9 brands which generate more than 100 crores, right? So they are among the top 3 companies in respiratory, pain, and all these segments, right? So maybe those are the highlights of the company. Let's go into the fundamentals of it. So they have the highest, one of the highest market capital of 46,406 crores, currently trading at 453 crores. They have the least and the best PE of 9.43 times when compared to industry of 27.0 times, right? So, but the ROCE and ROE both are around more than 15%. So that's a very good. So we always try to get stocks with ROE and ROCE more than 15. So in last 5 year price chart, so the company had made low of 220 rupees in August 2019, and currently trading at 450 rupees. It's almost 2x. The company is trading at 2.87 times of its book value. The company has delivered a poor growth sales of 9.88 in percent in last 5 years. The tax rate seems to be low. The company might be capitalizing the interesting cost. Earnings include the other income of 24,500 crores, right? But the good thing about the company is they have reduced their debt and they're paying a healthy dividend of 22.21%. So in the peer comparison, they have the least P ratio with among the one of the top market capital, and they have the best quarter profit variable of almost 550%, right? The 550% growth in just one quarter. So the ROE and ROCE looks pretty decent. So let's get into P&L. So the sales have grown more than 5 times from 3,500 crores to 15,000 crores. So 15,000 crores is their all-time high. So seems to be all the companies we are picking has made all-time high in this fiscal year. So in trailing 12 months, it has broke even that, and it has gone till 15,298 crores, which is all-time high. The profit, operating profit, has grown from 711 crores to 3,344 crores. Even that is all-time high, and is the trailing 12-month as well all-time high. Their operating margin has been constant around 20 to 20, 15 to 22%. So the interest rate, so uh, like in 2017 they had interest rate of 45%, 45 crores to 91 crores. Suddenly they had 2x jump. Again they had 1.5x jump. So they have been decreased now. So the PBT have increased significantly from 600 crores to 2,285 crores. So that is the all-time high. And the amazing thing about it here is the profit before tax PAT has made all-time high, and it's around 5,025 crores in trailing 12 month. So because of other income, right? So it's clear, right? We can just see it here. So it's other income were 2004, almost 2,500 crores. So the PAT is, even if we remove this, so still the company would be having more than 2,500 crores, which is all-time high. So is the net profit from 500 crores to 4,796 crores, and the EPS as well, right? They have made almost 10x growth in EPF from 4.93 to 46.85 currently. These three segments, we have to be careful. It is just because of other income, right? So let's look into component sales growth of last 5 years. Component sales growth is 10%, and profit growth is 3% for last 5 years. It's not a great, but in trailing 12 months, we could see it's 184%. And the stock price CAGR is still, it's not a good sign that it has just grown for 5%. And return on equity is pretty good. It's around 19%. The company has constant share capital around 1 or 2 crores, but they have almost 8x growth with their reserves, and their borrowings have grown for 3x, right? So they have increased their borrowings almost to 8,000 crores. So currently, it seems to be they have reducing their borrowings. So they have a positive operating cash flow that's around 3,293 crores, and the debtor days have been uh, in the average with the company, where they had 110 94 days. Currently they have decreased to 76. But ROCE have been decreased from 2730 to almost 15. So we can see this 12% and 15%, like they're almost at the low of their all time. So the promoters have been constant with the company. So this is where the strength of the company and the trust of the promoters, it's very important to company. The FIS have decreased from 8 to 4. The DIS have increased from 9 to 11%. Even the government have the shares of Cadila Healthcare, and the public have also increased. So these are the top three stock guys. One is Laurus Lab, the second one is Amrutanjan Healthcare, and the third one is Cadila Healthcare. One more thing to highlight is, let's just compare Nifty 50 with the Nifty Pharma. So in last 5 years, the Nifty has grown for 107%, right, in last 5 years. But in case of Nifty Pharma, it is just 31.4%. So this shows that there is a huge potential for a Nifty Pharma uh, to grow from just 31%. So we can expect a better growth in next 5 years when compared to Nifty, right? So Nifty has given 107%, and it's just 31% for last 5 years. So it's clear that there is a huge potential, like, right? So if the margin is broken, we can see that uh, the Nifty Pharma growing along with the Nifty 50. So this is our content, guys, for today. Hope this will be helpful for you. If you have any doubts or any clarifications required, please leave it in a comment. We will happy to address it. Okay. Thank you. Have a great day.